just confirm when we are live. How are you all doing? Guys, just confirm when we are live. Are we live now? Just confirm. Yes or no? Yes, very good evening. Good evening. I, CA Pratik Vinay, welcome all of you to this session of amendments for CMA Final DT. I hope you all are doing really very well. So friends, in this session, let us discuss the entire amendments as applicable for your June 24 exams. Okay. So friends, you know that this subject of DT and international tax is humongous subject. Yes, we are going to cover its amendments today. Okay. So, guys and girls, ladies and gentlemen, please do subscribe to the channel and hit the bell icon before we go ahead. Okay, so that you don't miss out on such important videos. Okay, and such important notifications. Good evening, Anand. Good evening, Mandalji. Okay, so guys and girls, let us start. 43 pages of supplementary has been issued by CMA Institute. Okay, so first of all, let's start. Let's start with rates of income tax. So as you know, 115 BAC, 115 BAC matlab alternative tax regime. Now alternative tax regime has become a default regime. All of you know that earlier it was a alternative tax regime. अब वो जो alternative tax regime थी ना, that earlier alternative tax regime has now become a default regime. Okay, applicable in case of individuals, Hindu undivided families, AOPs, BOI, and artificial juridical person. Agreed, all of you? Yes, sir. So, what are the tax rates under that? So, very big change. Tax rates under that have changed. Yes, Kumlaji tax rates have changed. Kavyaji tax rates have changed. Okay, up to 3 lakhs, no tax. Okay, 3 lakh to 6 lakh, 5%. 6 lakh to 9 lakh, 10%. 9 lakh to 12 lakh, 15%. 12 lakh to 15 lakh, 20%. And above 15 lakh, 30%. Did you all understand the rates of tax? Very easy to remember. Up to 3 lakh, then 3 to 6, 6 to 9, 9 to 12, 12 to 15, and above 15. Agreed, all of you? Yes. And here, how you have to go? Nil, 5%, 10%, 15%. You have to increase by 5%. Then 20%, and then 30%. Mind you, after 20, we jump to 30. So, will you all be able to remember this? Rates of tax? Yes, sir. Absolutely. Okay. And as you know, in this regime, even if it is resident senior citizen, resident super senior citizen, it doesn't matter. It doesn't matter. The rate of tax, I mean the basic exemption limit is rupees 3 lakhs. Okay guys, so let us quickly once again recollect. 0 to 3, no tax. 3 to 6, 5%. 6 to 9, 10%. 9 to 12, 15%. Then 12 to 15, 20%. And above 15, 30%. Okay. Then one interesting concept, rebate. Okay, you will say rebate existed from beginning. Then what is so interesting in it? But friends, what has changed? The limit has changed. Okay, rebate will be applicable if total income does not exceed rupees 7 lakh. All of you tell me in the chat window. Rebate is applicable if total income does not exceed how much? Rebate will be applicable if total income does not exceed rupees 7 lakhs. Okay. I hope you all are sitting with calculators. I want you to do some calculations along with me. Are you sitting with calculators? Yes, absolutely. Yes. Now see, how much will be the rebate? Rebate will be 100% of tax liability or 25,000. 100% of tax liability or 25,000, whichever is lower. Getting it? 100% of tax liability or 25,000, whichever is lower, that will be the rebate. Okay. So before going to one concept of marginal relief in rebate, first time in the history of Income Tax Act, they have introduced something called as marginal relief in case of rebate. Okay, something interesting coming on your way. But before that, check this case 1 first. Okay, case 1 and then case 2. Then I will explain you the meaning of relief, marginal relief. Okay, in case 1, the total income is 6 lakh. So guys, can you calculate tax on 6 lakh as per alternative tax, means this 115 BAC? Yes, can you calculate under 115 BAC tax on 6 lakhs? How will you calculate it? Up to 3 lakhs, no tax. 3 lakhs to 6 lakh, income is 3 lakh. On that 3 lakh, can you please calculate at 5%? Are you all getting rupees 15,000? Yes, sir. We got 15,000. You will get rebate of this entire 15,000. Sir, why we are getting rebate? We are getting rebate because total income of SSC is not exceeding rupees 7 lakh. That's why we got the rebate. How much rebate we got? We got rebate to the extent of 25,000 or 15,000, whichever is less. So did you get it? We got rebate of rupees 15,000 and therefore your tax liability will become nil. Agreed, all of you? Can I go ahead to case 2? In case 2, what is your income? Your income in case 2 is 6 lakh 80,000. Agreed. On 6 lakh 80,000, calculate tax liability. How will you calculate tax liability on 6 lakh 80,000? See, on 0 to 3 lakhs, no tax. 3 lakh to 6 lakh, 3 lakh to 6 lakh, you know tax at 5%, 15,000. 6 lakh to 9 lakhs at 10%, means between 6 lakh to 9 lakh, you have got 80,000 because you have got 6 lakh 80,000. So on 80,000, can you calculate at 10%? You are getting how much? Are you getting 8,000? So 8,000 plus 15,000. Are you getting 23,000? Yes, sir. So rebate will be 23,000 or 25,000, whichever is less. So your rebate will be 23,000. Do you all agree with me? Check. Your rebate will be 23,000. Did you all understand? Shall I go ahead to the provision of marginal relief in rebate? Can I go to provision of marginal relief in rebate? Have you all followed till this point? Absolutely, sir. Absolutely. So what is marginal relief in rebate? Let's try to understand. Okay. When will that situation arise? Your total income is 7 lakh 10,000. Agreed. Your total income is 7 lakh 10,000. On 7 lakh 10,000, please calculate tax. So, you know, up to 3 lakh no tax, 3 to 6 lakh, you have got 15,000. 6 lakh to 9 lakh, between that you have got 1 lakh 10,000. So on that 1 lakh 10,000 at 10%, 11,000. 7,000 plus earlier 15,000. Did you all get till this point 26,000? Did you get normal tax 26,000? Yes, sir. Now, once you get 26,000, please try and understand you are not getting rebate ideally. Why ideally you are not getting rebate? Because, sir, our income exceeds 7 lakh. Our income exceeds 7 lakhs. So ideally we are not getting rebate, isn't it? But income tax department and income tax act and income tax law, you can say, is generous to you, is kind to you, and they are saying you are losing rebate only because of extra 10,000 rupees over and above 7 lakh. What is your income? Over and above 7 lakh, your income is just 10,000. Yes or no? Over and above 7 lakh, your income is just 10,000 rupees. Means your income is just 10,000 extra than 7 lakh. So guys, you are going to get now a what? Rebate. But rebate will be 16,000. Why it will be 16,000? Because see, tax tax was 26,000, and by how much your total income exceeded 7 lakh? Your total income exceeded 7 lakh by 10,000. So you will get rebate, but 26,000 minus 10,000. You will get rebate of how much? You will get rebate of 16,000, and eventually your tax payable will be rupees 10,000. Did you get this point, guys? All of you? Interesting, no? First time in history of Income Tax Act, they have got concept of marginal relief in case of rebate. So I hope all of you have followed it. If I was examiner, I will ask you such a question in coming exam. So will you be able to answer it? Ask yourself, will you be able to answer it? And one point you should understand, the cutoff limit for this is 7,27,770. 727,770. After 727,770, you will not be able to get any rebate. Just for example, if 7,30,000 is your what? If 7,30,000 is your income, calculate tax on that income. It will come to, you know now, till first 6 lakhs, you know, it is 15,000. 0 to 3, no tax. 3 to 6, tax at 5%, you know, it is 15,000. 6 to 7 lakh 30,000. That is 1 lakh 30,000 into 10%. So that 13,000 plus 15,000, are you getting 28,000? But friends, if you try to do 28,000, if you try to do 28,000 minus how much exceeds 7 lakh, then it comes to 30,000. So if you do 28,000 minus 30,000, it will be negative. So there is no question of, you know, taking any rebate. You will have to pay tax of entire rupees 28,000. Have you understood, all of you? Yes, sir. Absolutely. Absolutely. Got it, na, guys? Shall we go ahead? So this way, please be clear with this concept of marginal relief in case of rebate. Okay. Now, where can they trouble you in these questions? You have got in international tax, unilateral relief, bilateral relief questions, section 90, 90 and 91 questions. In section 90, 90 and 91 questions, if they tell you in the sum, in the exam, they tell you that solve this question. Okay, in the exam, if they tell you solve this question by way of, you know, default provisions. Default provisions means now 115 BAC. So if they tell you solve by 115 BAC, you have to apply these slabs. Did you get it? And you know, while application of these, you don't get many of the deductions and exemptions. Clear? Shall we go ahead? Just tell me. And I'm quite sure, guys, you have subscribed to the channel, hit the bell icon, and like the video because you know that this is really helping you, and it's my guarantee it will help you. As we go ahead, I will keep on telling you which amendment matters in the exam, which does not matter, what type of question could be framed on which amendment. Okay. Now, as we go ahead, let's see. Surcharge. A very important change in the surcharge. You all know surcharge rates. Okay, let me quickly recollect for you the earlier surcharge rates that you know for individuals. What you know that if total income is between 50 lakhs to 1 CR, surcharge is at 10%. If total income is between 10 CR to not 10 CR, if total income is between 1 CR to 2 CR, surcharge is at 15%. Total income is between 2 CR to 5 CR, surcharge is at 25%. And total income is above 5 CR, surcharge is at 37%. Yes or no? All of you know that, isn't it? What is the change? What is the change? The change is that, friends, when I'm in 115 BAC, then the maximum surcharge will be 25%. Even if income exceeds 5 CR, surcharge will be 25%. Did you get the point? So in 115 BAC, lower surcharge because the bracket of income exceeding 5 CR pay surcharge at 37% is removed. Did you all get the point? Did you all understand? Let me know. Let me know quickly. Did you get it? This will be only under 115 BAC. Mind you, in normal, matlab in regular provisions, you continue with above 5 CR paying at 37%. All of you quickly confirm whether you all have followed this. Got it. Wonderful, wonderful. And you all know one thing. You all know one thing that whenever I am having dividend income or long-term capital gain, short-term capital gain. See, this is short-term capital gain on transfer of shares. This is long-term capital gains on transfer of shares. This is 112A matlab means long-term capital gains on transfer of listed shares. In these cases, okay, if you know total income includes any of these things, then surcharge on these shall not exceed 15%. Okay, so even if your income is exceeding 2 CR, surcharge on these will not be at 25%. Surcharge on these incomes will be at, yes, surcharge on these incomes will be at what percent? It will be at 15%. Agreed. On short-term capital gains on transfer of equity shares which are listed, on any long-term capital gains and long-term capital gains on equity shares, as well as on dividend. The surcharge cannot exceed 15%. Did you all get it? Sir, Mandal is asking one question. If I opt out of 115 BAC, then what is the total income limit for 87A? Original means 5 lakh. 5 lakh 12,500. You know that. 5 lakh when total income is not exceeding 5 lakhs, then you can take rebate up to rupees 12,500. That continues. Yes. So 87A's change is only for 115 BAC. Agreed? All of you got it? 87A's change is only for 115 BAC. Shall I go ahead? Did you follow? Yes. Then, going ahead, Kumlaji, I did not understand your question. Only for 115 BAC question mark is for which provision you are asking me? It's for which provision that you are asking me? Okay, understood. Okay, very good. Before me understanding your question, you understood. Wow. Now, old tax regime. Okay, can you go and continue, or you can opt for old tax regime? See, earlier what we used to say, opting for alternative tax regime. Now I'm not saying opting for alternative tax regime. Now I'm saying opting for old tax regime, because old tax regime is now default. Uh, I mean, my bad. 115 BSc is now default, isn't it? So I will have to opt for old tax regime. Got my point? I will have to opt for old tax regime. So question is, can I opt for old tax regime? Yes, I may opt for old tax regime. I may each year to year shift from old to new, new to old. No problem. Okay. Old to default. Old default to old. I can keep on doing that if I don't have PGBP. If I have PGBP, then what happens? If I have PGBP, then read this. Such option, once exercised, shall apply to subsequent assessment years. Means if I opt for old tax regime, means regular rates, those will continue. Such person who has exercised the above option of shifting out of default tax regime for any PY shall be able to withdraw option only once. Only once he can go in default tax regime and pay tax under default tax for the PY other than the year in which it was exercised. Thereafter, such person will never be eligible to exercise option under this section. Means he will then lifelong continue under default tax regime of 115 BAC. So did you understand this play between default tax regime and old tax regime? Once tell me which is default tax regime, which is the section number for default tax regime. Section number for default tax regime, of course, is 115 BAC, isn't it? Did you all get it? Yes or no? Quickly tell me. Waiting for your replies. Very interesting. More amendments coming up on your way. Yes. Wonderful. Wonderful. Let's go ahead. Then comes your, old tax regime. That is now which you have to select. Now you know the rates of tax in that. So not revising that. Okay. Up to 5 lakh nil, 5 lakh to 10 lakh, 20%. Means I am talking for whom? Super senior citizen. Up to 5 lakh nil, 5 lakh to 10 lakh tax at 20%, above 10 lakhs at 30%. Isn't it? Slabs. Then senior citizen, resident senior citizen up to 3 lakhs no tax, 3 lakhs to 5 lakhs, 5 lakhs to 10 lakhs, and above 10 lakhs. Okay. Then for any other, up to 2.5 lakhs no tax, 2.5 lakhs to 5 lakhs tax at 5%, 5 lakhs to 10 lakhs tax at 20%, and above 10 lakhs tax at 30%. And see, you had asked me a doubt about rebate. So now again it gets clear here also. Yes, here also it gets clear for you. The point of rebate. Rebate under old scheme? Yes, continues to be same. If total income does not exceed 5 lakh, then rebate available will be 12,500 or tax payable, whichever is lower. And as discussed, for surcharge in old scheme, this exceeds. This exists where total income exceeds 5 CR, the tax will be at 37%. Agreed? This continues. So I hope all of you have followed this. And of course, that same point continues that your dividend income, long-term capital gain, short-term capital gain on equity shares listed cannot exceed 15%. The surcharge cannot exceed 15% on that. That point continues here also. Clear? For firm LLP, nothing has changed. For firm LLP, tax is payable at flat 30%, and surcharge will be applicable if total income exceeds 1 CR. Surcharge will be at 12%. Okay, and in domestic companies, as we have all studied in the class, of course, whatever recent batch we have done, that is of course amended batch. So obviously we have incorporated all the amendments in that batch. So for domestic company, the rate of tax is 25%. When it is 25%, when total income in the PY 21-22, total income in the PY 21-22 does not exceed 400 crore. You will be able to remember this? Yes, sir. How to remember 21-22? See, we are discussing for which PY? We are discussing for PY 23-24. So, what is the PY before 23-24? 22-23. You have to go not to 22-23, but one PY before that. So, it is 21-22. Got the point? So, you have to check for PY 21-22. So, if for 21-22, your turnover is not exceeding 400 crores, then you will pay tax tax at 25%. But if it is exceeding, then it will be at 30%. Okay, and in case of foreign company, 40%. And surcharge rates. So this is just revision also. Huh? Actually, no change here. But just for you to revise the taxation of companies, I am doing this. If total income exceeds 10 CR, as you know, 12%. But if total income is between 1 CR to 10 CR, then it is at 7%. Okay. And foreign company, 2% and 5%. Means 1 CR to 10 CR, 2%. And if it is exceeding 10 CR, the total income of the PY, then 5%. Is it clear to all of you till this point? Yes. Absolutely. Thank you so much, Mandalji. Thank you so much. Then, see what amendments are a bit irrelevant. Already which I have covered those. Okay, while I am discussing already I have covered. I am not going through them again. So, extending deeming provisions under section 9. You know what is 9? 9 is income arising in India or deemed to arising in India. So it has this deeming provision has extended to gift which is received by resident but not ordinary resident. So resident but not ordinary resident receiving gift in excess of rupees 50,000 will now become taxable in India. Okay, so the deeming provision, aforesaid deeming provision has been amended to include any sum of money exceeding 50,000 received by not ordinary resident without consideration from a person resident in India. Okay, so person resident in India is gifting resident, not ordinary resident, some amount in excess of rupees 50,000 that will be deemed to arise in India for that resident but not ordinary resident. Got it? And that will become taxable in India. Got it? Then section 10. You know what is section 10? It is exemptions. So in that section 10 4D, what they have done, they have modified to include reference to IF, International Financial Service Center Authority. So for that also, for this IFSCA also, exemption will be given. Okay, then in 10 4E, what they have done, exemption to any income distributed on the offshore derivative instruments. So that will now become exempt. The income distributed on any offshore derivative instrument. Then 10 4G, exemption pertaining to any income received by non-resident from such activity as may be notified by government. That line has been introduced. Then 10 4H, NR or unit of International Financial Service Center engaged primarily in business of leasing of aircraft by way of capital gains from transfer of equity shares of domestic company. Okay, so for them exemption has been introduced under this 10(4)(h), and this exemption will go till 10 years beginning with the AY in which the business has been started. Okay, or till okay, or period of 10 years beginning from AY 24-25, where the period referred to clause A ends before 1st April 2034. Okay, then after that, one provision, whenever some LIC proceeds from life insurance, saying LIC is incorrect, life insurance. Whenever any proceeds of life insurance are received, okay, whenever any proceeds of life insurance are received from policies other than ULIP, okay, from policies other than ULIP, in aggregate of rupees, where the premium paid was in excess of rupees 5 lakh, then income from them will become taxable. Why this has been done? Because what many high net worth people do, they do the investments in life insurance. They do the investments via life insurance, so that proceeds of life insurance when received will be exempt. So government started understanding that. So what they do? They said that we will tax income from insurance policies having premium or aggregate of premium above 5 lakhs in a year. Okay, and this will become taxable under the head income from other sources. And this amended provision will apply for policies issued after 1st April 2023. Did you get the point? You have done some investments or you have paid some premiums. Now you are getting the maturity amount. You are getting maturity amount means it is endowment policy. Endowment policy means the insured person himself, not his family member after his death. Insured person himself is getting the maturity proceeds from the LIC. Getting it? What will happen? It will become taxable if the premium paid initially was exceeding rupees 5 lakh in aggregate in the year. This will happen for policies which are issued after 1st April 23, because this is amendment made by Finance Act 23 now. Got the point? Then sum received from Agnivel Corpus Fund will be exempt. Then the exemption available for news agency collection of news, that exemption is withdrawn. So of course on these issues you cannot expect any questions. Then extending scope of exemption to Sikkimese women marrying non-Sikkimis and an individual domiciled in Sikkim. So for them, exemption has been given, means actually already exemption continues for Sikkimis earning some income. But now the exemption has been extended to whom? Even the Sikkimis woman marrying non-Sikkimis. Okay, an individual who was domiciled in Sikkim before 26 April 1975. An individual whose specified ancestors were domiciled in Sikkim on or before 26 April. Okay, this way. Then dividend income of a unit of any IFSC. So that is exempt. And exemption to some development authorities. Fine. So these are your provisions in relation to exemptions. Okay, then one point that may matter is this point. One point that may really matter now is this point, that is of time limit for bringing consideration against export proceeds in India. Okay, suppose there are some sales done by special economic zone, then time limit has been given to bring export proceeds, means whatever amount we have earned in foreign, we should get that in India within time limit if you want to continue to claim exemption. Because one of the reason of giving this exemption is that, what is the reason behind giving exemption? India should earn foreign currency, convertible foreign exchange, isn't it? So time limit is mentioned within which you should get this foreign exchange in India. So if the proceeds from sale of goods or provision of service is received in or brought into India by assessing convertible foreign exchange within period of 6 months from the end of the relevant PY or within such further period as competent authority may allow in this behalf. Means till September 30, you should get the foreign exchange in India if you want to continue claiming exemption of 10AA. Clear? Got the point? Because it is said now that you should get it within period of 6 months from the end of relevant PY. Means you should get it by 30th September. No need, Komla. Absolutely no need. Absolutely no need to remember so many exemptions. I hope audio is proper. Mandalji is saying that he is having audio issue. What about others? I think audio is systematic for all of you. Just let me know. Let me have some water, guys. Let me have some water. Okay. People are saying audio is okay. From my jumbo bottle, let me have some water. Because amendments are going to continue. As far as possible, You should watch them live. Permission granted, okay. Then, one more thing. If export proceeds from sale of goods or provision of service shall be deemed to have been received in India, where such proceeds from sale of goods or provision of service are credited to separate account maintained for purpose by the SSC with any bank outside India with the approval of RBI. So you're exactly not getting the convertible foreign exchange in India, but you're keeping this proceeds outside India in a different account, so that will be acceptable. Of course, if you have done it with the permission of Reserve Bank of India. Agreed? Okay. Now, one topic which is okay, important for your exam, not so important, but still a bit important, and which is gaining importance in your syllabus slowly, that is taxation of charitable trust. Okay. So to explain you this, I have made some examples also. So we'll also go through those examples. Okay. Now, when we have to talk about charitable trust, we are talking about charitable trust of two regimes. One is regime for any fund. Fund means I am talking about pool of funds, that institute which is having pool of funds like mutual fund I am talking about, or institution or trust or any university or any other educational institution or any hospital or other medical institution. I am talking about them. These are called as first regime. And regime for the trust registered under 12AA, 12AB. 12AA, 12AB means I am talking about charitable trust. So did you get in first regime, wherever I am talking about first regime, I will be talking about such institutions, okay, funds, universities. And when I talk about regime 2, I will be talking about the charitable institutions. Did you all get the point? So we have the discussion now. But did you get what is regime 1 and regime 2? Yes. So you may fall in first category, you can call it category. Okay? Nothing else. It is a category 1, category 2. Now see. Depositing back of corpus and repayment of loans and borrowings. What is this? That's why I go to the supplementary. So with examples we will understand. If you just read like that, it will become very difficult for you to understand. So I have given you supplementary notes for these amendments. Okay, understand the issue. Issue is deep. Issue is really deep. Do you understand what is application of money first of all? What is application of money first of all? Do you understand? You should understand some basic concepts before going for understanding of this amendment. Application means, friends, use. Application means use of money. Okay. So in case of trust, application matters a lot. Application of money means I am using the money for this purpose. That is called as application. Did you understand? Application. Now what happens? See. So directly understand with example. Okay. I will give you relevance. A trust or institution means it can be regime 1, regime 2. Is under regime 1, regime 2. Receives voluntary contribution of 10 lakhs. So trust got contribution from someone, means donation from someone of 10 lakhs. Okay. In PY 22-23 with specific direction. What direction? Direction means instruction that it shall form part of corpus of the trust or institution. Okay, corpus of the trust or institution means, corpus means, you understand, uh, pool. It will go in the pool of funds for the trust or institution. Now it is deposited by the trust or institution in the separate account in the mode prescribed during the same year. So what happens? This contribution amount received is not chargeable to tax. Okay, all of you got it. Why not chargeable to tax? Because I have kept it in a separate account. Okay, as prescribed in 11.5. So I have nicely kept it in a separate account. So government says don't tax it. It will be used. Yes, it will be exempt. Very good. Now, what happens? See, in PY 23-24, the trust utilizes 4 lakh out of the above 10 lakh to meet out expenses pertaining to object of trust or institution. Then. So earlier this point did not exist. Now it nicely says that such 4 lakh will not be treated as application for calculating taxable income. Because guys, if you treat it as application again, what will happen? If you treat it as application again, what will happen? Earlier when you received it, you have not taxed it. From that only you are spending. So don't call it as application. Clear? Pratik is asking, not me, Pratik, Prathik. My South Indian version is asking, this is how people spell me in the South. Pratik, right? So, anyways, there's one student named Pratik who is asking, Sir, I have been watching your live classes in MEPL app. So, first of all, Pratik ji, are you following the lectures? Should I have to watch the amendment lecture too? Better, but anyways, our main classes are amended only if you are watching the latest one. Okay, if you are watching the latest one, they are amended only. So I hope that you are watching. You are watching. You have said, in fact, that you are watching live classes. So no problem. No problem then. Then you may skip watching amendment. No problem. Because of course, in my live lectures, I will try to give every possible facility to my student. But it can happen that some of you might have taken lectures of last exam, or some of you might not have joined the class. So better. Okay. Pratik ji, so you are saying you have started scope of supply. So you must be talking about IDT boss. This is lecture of DT going on, no? Okay, very good. Yes, for revision purpose, so it is best. So let's go ahead. So correct. In this amendment, coming back to this amendment, when I got 10 lakhs, at that time, I did not pay tax on that 10 lakhs. So now when I spend out of that 10 lakhs, 4 lakh, of course, it should not be considered as application. Okay, good. Let's go ahead. Say subsequently in PY 27-28, trust generates a fresh income of 3 lakhs, and it is reinvested in the corpus fund, then of course 3 lakhs will be treated as application. So in short, friends, application should be done out of fresh income. Did you get the point? There is no point in making application out of already, received donation. Clear? So this point is being conveyed via that big paragraph. So I hope I have made it clear to you by giving you a very short example. So you really need not read all these things. Agreed? Shall we go ahead? Can I go to second example? Yes, absolutely. 15% free accumulation will continue. Why not? It will continue. So both have to be read together. Well, I had said that 15% application will go. 15% application will continue. Why not? Okay. You read subject to 15% application. Fine. 15% accumulation. Fine. Then fine. So I have not considered accumulation in that case. Clear? Okay. Let's read this second example. Second example is visible to all of you. Yes. A charitable trust gets a loan of 10 lakhs from Punjab National Bank. Out of this, 2 lakh is utilized during PY 23-24 to meet out expenses pertaining to object of the trust. Now what happens? Utilization of 2 lakhs cannot be claimed as application because it is out of loan. So first of all, it is not out of income. That spending is out of loan. So it cannot be claimed as application. Clear? Now, subsequently, out of the income of 27-28 means one of the next PY, trust or institution repays the loan. So guys, amount utilized to repay the loan will now be considered as application. Because at one of the 2 points, you should consider it application. No? Getting it? When you're using the loan, you're not considering it as application. So at least when you repay the loan, you have to consider it as application. Clear? Otherwise, you will be denied benefit. So that should not happen. You should get benefit at least once. So when you are getting the benefit, you are getting the benefit when you are repaying the loan. At that time, it is called as application of income. Clear to all of you? Shall I go ahead? Yes, sir. Absolutely, absolutely. Chalo, let's go ahead and go ahead in your supplement. See, only 85% of eligible donations made by trust or institution under first or second regime to another trust under the first or second regime shall be treated as application. Okay, so how much of donation to other trust? This was the issue under discussion, that treatment of donation to other trust. So yes, if you donate to other trust, that will be also treated as application. But only, yes. Now out of your donation, they should not donate to other trust. That layer I am talking about. I donated to your trust. Now please, out of that, your trust should not donate to another trust. Then it will not be considered as application of their income. So layer, only one layer. That's what we are discussing. Otherwise, so it will continue like this, passing the parcel. So it's not allowed that way. Then, omission of redundant provisions related to rollback of exemption. Okay. The trust and institutions under second regime. So earlier what used to happen, that they were able to take benefit of what they have done before registration also, because such provisions existed. Now trust and institutions under second regime are required to apply for provisional registration before commencement of their activities. So there is no question of rollback provisions. So very procedural things that have been changed. They will not affect your computations and understanding of this topic. Now, do you remember one point, that is, one point that will now become important is this. Tell me, do you remember acquisition of income? Do you remember that? Please tell me. No, 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 not new point. See, this acquisition of income. Do you remember acquisition of income? So in acquisition of income, I want to tell you one point. What is acquisition of income? Acquisition of income means when your trust activities are going to stop. Do you remember when your trust activities are going to stop? Yes, exit. Absolutely. We have discussed this as exit. So at the time of ending of the trust, what happens? Whatever extra amount you have accumulated, on that you have to pay tax eventually. Yes or no? So in this, again, one procedural change has been done. Because of one procedural change, or rather I would say, uh, there was one loophole that has been amended now. Now see what is that. To provide that provisions of 12 EB shall apply to trust, this provisions of acquisition should apply to trust or institution under first or second regime who fails to make application in accordance with provisions of clause 1, 2 or 3 of the first proviso, and so on. Now upon violation of this, it shall be deemed to have been converted. What happens when they fail to register? Again, re-registration has to be taken. When they fail to take re-registration, this trust of first and second regime, when they fail to take re-registration, what happens? They have been deemed to be converted into any form not eligible for registration or approval in the PY in which such period expires. So guys, because of this, what happens? They lose their status as firm. Getting it? They lose their status as firm. So now the provisions of this acquisition of income should apply in those cases also. So they should apply not only when I am stopping the business, but they should apply in such cases also, where automatically my status as a trust is going to get stopped. Getting it? So that is what I have to understand. Clear? Yes, absolutely, absolutely. 34.944% tax. Yes, remember very well. Good, 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 good. Let's go ahead. Then, of course, some amendments in salary and big amendment. Big amendment in salary, that is with respect to valuation rule for rent-free accommodation. For last so many years, we were doing it according to, first of all, 2001 census. Now we have to, of course, do as per 2011 census. That is one thing. Accommodation, what we were doing? We were doing, if the population exceeds 15 lakhs, we are doing on the basis of population. No? Population exceeds 25 lakhs. Population is between 10 to 25 lakhs, and population is below 10 lakhs. Do you remember? We used to do that. in valuation of accommodation. Now they have changed. What has been changed? Having population exceeding 40 lakhs as per 2011 census. So they have gone now to 40 lakhs. From 25 lakhs, they have gone to 40 lakhs. And they have come down to 10%. The value of accommodation will be 10%. Earlier, what used to happen? When it exceeded 25 lakhs, the valuation of accommodation used to be 10% or 15% of salary. Now it has come down to 10% of salary. So when population exceeds 40 lakhs, 10% of salary. When population is between 15 to 40 lakhs, when population is between 15 to 40 lakhs, 7.5% of salary. And when in any other city means population is less than 15 lakhs, then it is 5% of salary. Did you understand the new valuation for accommodation? Yes, of course, if owned by employer, that category. If taken on rent by employer, then rent paid by employer or 10% of salary, whichever is lower. Rent paid by employer or 10% of salary, whichever is lower. Earlier it was rent paid by employer or 15% of salary, whichever is lower. Now it goes down to 10%. So some type of, you can say, it is done in the favor of the employee. You can say that because valuation of accommodation will be lower amount. And there is one capping also that has come into picture. Capping means it cannot exceed particular amount. What is this capping? You should apply when in the first year when you are getting the accommodation, that value you should take multiplied by CII for the PY in which you are calculating the perquisite of accommodation upon CII for the PY in which accommodation was initially provided to employee. This working you should do. And this will be your maximum value of accommodation. So in short, your value of accommodation will be, in future, what your value of accommodation will be? The value which you calculate as per percentage or this, whichever is lower. Okay, so just to give you example, say in 23-24, your value of accommodation came to 2 lakh rupees. Okay, now say in 24-25, assume we don't know what will be the CII. Assume CII is 370. So what you will do? What you will do now? How will the valuation be done? 2,80,000. Why 2,80,000? 28 lakh. Your salary increased, and your salary became 28 lakhs. So 10% of 28 lakhs. That is 2,80,000. Or the cap. How much is the cap? 2 lakh, which was your value of accommodation in the first PY. First PY means when you have got the accommodation, multiplied by CII for the PY for which you are doing the valuation, means multiplied by 370 divided by 348. It comes to 2,12,644. So how much will be your value eventually in this case? Eventually, your value will be 2,12,644, being the lower of the two. So again, I would say done in the favor of the assessee. Did you get my point? This is also done in the favor of the assessee. That cap is put. So on valuation, when cap is put, wonderful, no? This government is thinking about you. Shall we go ahead to check the amendments in PGBP? Yes, there are some good amendments in PGBP also. Good for employees, extra for you. Yes. But just trying to tell you the logic. Okay. So, what is there in PGBP? Understand. Understand. 28. What is 28? 28 is the charging section. So, amendment in that charging section. Okay. High Court had interpreted that if benefit of perquisites is in cash, which perquisites? I'm talking about perquisite received by businessman. They are in cash. Then it is not covered within the scope of 28. Okay. So now 28 has been amended to give respect to the order of this High Court. Provisions of said clause also applies to cases where provisions of said clause also applies to cases where benefit of perquisite provided is in cash or in kind or partly in cash or partly in kind. Okay. Then 35D. What is 35D? Okay. Komla is asking in the earlier question you're asking, right? No, it is not 24-25. It is 23-24. 23-24 is the first PY. Clear? Your doubt was about earlier question, right? 24-25 is not first PY. 23-24 is the first PY. I hope it is clarified for you. Yes, no? Okay. Nani, have you understood? Komla ji, have you understood? Yes. In the example, 23-24 is the first. Okay. So, 2 lakh multiplied by CII for the PY in which you are doing the valuation upon CII for the first PY. First PY means originally when you had calculated that value. That's what I'm trying to tell you. Then going for amortization of preliminary expense. Now in this, one small procedural point was there. So now what has been happened? 35D has been amended to remove the condition of activity in connection with these expenses to be carried out by concerned approved of the board. By the concern approved by board. Board means CBDT. It used to become very difficult, to do the expense by concern approved by board. It used to become difficult to get the work done specifically by that concern which is approved by CBDT. So now what they have done, they have removed this type of difficulty. Okay. Instead, assessor shall be required to furnish a statement to claim this deduction. Now just furnish a statement containing particulars of this expenditure within prescribed period. Okay, no need to get these expenses, no need to pay, get this work done from the specific concern. Got it? That is the amendment. Then, guys, one very big amendment is this clause H in section 43B. It is a huge discussion, amongst the enthusiasts of income tax. Is a very big discussion going on. 43BH. What is 43B? 43B means certain expenses are allowed as deduction only when you actually pay them. Getting it? Certain expenses are allowed as deduction only on actual payment basis. You understand that, no? Like amount payable to Indian Railways, interest payable to banks, cooperative societies, statutory dues, certain amount payable to employees. Do you remember this? 43B? Yes. In fact, in fact, they are allowed only when they are actually paid. They are allowed only when they are actually paid. Got it? Yes. They are allowed only when they are actually paid, isn't it? Now the point is, they could be paid up to due date of filing return also. You know that, no? They could be paid up to due date of filing income tax return. Clear? Now they have introduced 43B clause H. And why this becomes so critical? It is with respect to payment to be done to MSME. Means what? Small, medium, micro enterprise. To them, deduction will be allowed. Means whatever payment you are doing to them, of that payment deduction will be allowed only if you pay, within due date as per MSME and not due date of filing return. Getting the point? That's why very big amendment. So see, proviso of this section means proviso of 43B, what it says that deduction on actual basis will be allowed if the amount is paid by due date of furnishing return of income. That is what 43B says. But what does clause H say? Any sum payable by assessee to micro small enterprise beyond time limit specified in section 15 of MSMED Act shall be allowed as deduction only on actual payment basis. But till this point it was okay. However, proviso to section 43B shall not apply to such payments. Means what? Don't allow deduction if you make till September 30 due date of filing return. Don't allow. It should be within due date of MSMED. Did you get it? It should be within due date of MSMED and not within due date of filing of ITR. Did you get my point? Very critical point. I am going to take 2 to 3 examples also on this. Okay. Now, what does MSMED Act says? It mandates payment within time as per written agreement between buyer seller, written agreement, but which cannot be more than 45 days. Which cannot be more than 45 days. Clear? If there is no written agreement, then payment should be made within 15 days. Very strict. Very strict because they are very protective towards MSME. They are very protective towards MSME. So if there is no written agreement, payment should be done within 15 days. If there is written agreement, payment should be done as per the written agreement or 45 days, whichever is earlier. So in short, 43B's deduction also will be allowed if payment is done to this MSMED within time. Agreed? So shall we do questions on this? Are you ready to do questions on this? See this. See your supplementary notes. In that, I have given you example under 43BH based on 43B clause H. X Limited purchase goods from B Limited on credit Who is B Limited? Obviously, no prizes for guessing. It is a micro or small enterprise as per MSME Act. Date of purchase is 2nd March and there is a written agreement. Congratulations. There is a written agreement that X Limited has to make payment on or before 30 April. But whenever there is a written agreement, then the payment should be done as per written agreement or within 45 days, whichever is earlier. So can you calculate 45 days from 2nd March? Please calculate 45 days from 2nd March. So March remaining 29 days minus 45 minus 29, 16. So I think you should make payment till 16th April or 30 April as per the agreement, whichever is earlier. So what will you do? Will you take due date as 16 April or 30 April? One of the very important provision we are doing. I will be surprised if question is not asked on this in the exam. 99.99% question chances of the asking you this question in the exam. Such question. 16th April? Yes. How did you get 14 June, Komla? I did not get. How did you get 14 June? I have to calculate from 2nd March plus 45 days. So March remaining 29 days and remaining 29 days of March and now 45 minus 29, so you 16 days of April, so 16th April. Time as per written agreement is there now. I did not get you, Komlaji. You have to go for no, date of written agreement is there na 30 April. Date of written agreement is 30 April. So I mean I don't know from where did you get 14 June. Is it your birthday or something? So 30 April or 16 April, whichever is earlier. Where are you getting 14 June from? We are not getting you. But we are waiting for you to realize that it is 16th April. I hope you got. Whole India is waiting for you. 39th April? What is 39th April? Which planet you are from? Okay, okay. Now I will go ahead. Do you mean to say you calculated from 30 April? No, no, you should calculate from date of supply. Getting the point from 2nd, na? From 2nd March you should calculate, na? Yes, yes, I got it. I'm just trying to create humor out of nothing. Okay. So see, got it. So calculate from 2nd March, date of purchase. Now see what happened. 1 lakh is paid on 30 March 24. Is it within time? Is this 30 March 24 within time? Absolutely. It is within time. So take deduction happily. Is 2 lakh paid on 6th April within time? Yes, it is within time. Take deduction happily. Is 4 lakh paid on 15th April within time? Yes, take deduction happily. But next, paid on 6th May. Is it within time? Actually speaking, it is within due date of section 139(1), but we don't have to check that due date. We have to check due date as per MSME, and due date as per MSME is 16th April. So unfortunately, you can't take deduction of this 4,20,000. Agreed? So is the amount deductible? 2324, 2324, 2324. But last, not deductible in 2324, deductible in 2425. Have you understood? Mark this question very important. If you get any doubt, please let me know. Did you get it? Yes or no? Already we are into Babu 70 to 80 minutes of lecture. Have you got this point? Clear? Because I'm expecting, guys, a question on this. Yes. Very good. Very good. Wonderful. So I'm now closing this supplementary, which I had done, additional questions, which I had given. I'm closing that and I'm continuing with the further provisions. May I? May I continue? May I continue? Yes, sir. Absolutely. Then now understand 44AD and 44ADA, presumptive taxation. Do you remember presumptive taxation? What is 44AD? 44AD is your presumptive taxation for business. For that, threshold limit is was used to be 2 crores. Now, threshold limit can be taken to be 3 crores. When it can be taken to be 3 crores, if your cash receipts are up to 5%. If your cash receipts are up to 5%, you can take threshold limit of 3 crores. See this. Amounts received during the PY in cash does not exceed 5%. Then the threshold limit of 3 crores will apply. And in case of profession, threshold limit of 75 lakhs will apply. Earlier it was 50 lakhs. Now you can take 75 lakhs also. If the cash receipts does not exceed 5% of total gross receipts. Means what? I actually left PTS topic. What is PTS? I did not get you. PTS means? I'm not getting you. Okay. Yes, in presumptive taxation. Actually, this presumptive taxation, you left it like that only. For CMA Inter, you are saying, don't worry, we have done. I will tell you guys, those who are watching right now this lecture and want to revise anything from CMA Inter syllabus, let me tell you, we had done a. I'm always keep on telling in main batch also, we have done mission series of CMA Inter. Go and check. Go and check your what uh, playlist on this same channel. You will get mission series. So in that mission series, go and watch PGBP topic. Watch that and watch this amendment. Then you will understand. Okay. Now let's go ahead. So what happens in this presumptive taxation? You have opportunity of disclosing income of only 8% of turnover if you are a businessman, or 6% of turnover for what you are receiving in bank. So this becomes your PGBP, and then no need to maintain books of accounts. And if you are in profession, then 50% of turnover. Okay. So what I'm saying, it's threshold limits were different. Now those threshold limit earlier was 2 CR. From 2 CR, it gets extended to 3 CR with that condition, and from 50 lakhs, it will get extended to 75 lakh with satisfaction of that condition. Okay, clear, all of you? Then, for preventing misuse of presumptive scheme under 44 BB and 44 BBB, that is for non-resident, what they have done, you know what used to happen? People used to carry forward loss, means whenever there is loss, I'm talking about 44 BB and 44 BBB presumptive taxation. Whenever there used to be loss, they used to maintain books of accounts and show that loss. They used to carry forward that loss, and next year, when there was a profit, they used to restrict the profit under presumptive taxation. And then on that low profit, they used to claim that brought forward loss. Means they used to set off that brought forward loss, thus getting lot of undue benefit from the system of taxation. So now what has happened? 44 BB and 44 BBB has been amended to provide that, notwithstanding anything contained in 32(2) means unabsorbed depreciation, or 72(1) means brought forward business loss, where an assessee declares PGBP for any PY in accordance with provisions of presumptive taxation. In short, what will happen? No set off of unabsorbed depreciation and brought forward business loss shall be allowed to the assessee who is going for presumptive taxation. Clear, all of you? So some good amendments we can say. Then when there is a joint development agreement means owner of a land transfers the land or enters into joint development agreement with builder and gets in return some flats in that scheme plus some money. So in that case, what shall be the full value of consideration? So it shall be taken as the stamp duty value of that building, of that flat which is getting in that scheme, plus whatever is received in terms of money, monetary terms. Agreed? Did you all get it? Shall we go ahead? Still, many of you watching. Wonderful, wonderful. Keep watching till the end. Chalo, let's move ahead, guys. Let's move ahead. Then conversion of gold to electronic gold receipt and vice versa. So this will be, okay, what has happened? To promote conversion of gold to electronic gold receipt, they will exclude this conversion from definition of transfer, so that there will be no capital gain on this. So that amendment has been made. Okay, so and some allied amendments have been made to promote that to happen. Then next, so what will matter? I'm telling you that many amendments are such, honestly speaking, which don't matter in the exam. Okay, so from today's discussion till now, honestly, what matters in your exam is section 43, for section 43, B clause H, one that matters. Second, what matters is to some extent that taxation of trust, application of income. Second, that will matter to some extent. Third, presumptive taxation that we discussed just now, extending of that threshold limits from 2 CR to 3 CR, from 50 lakhs to 75 lakhs. So if I conclude till this point, then these three things are going to matter. Nothing else. Nothing else. But that I cannot tell you at the beginning. Otherwise, you will not watch all these things. Yes. Then capital gains in case of market linked debentures. So market linked debentures in these schemes of mutual fund, the capital gain will be calculated. Always it will be short term capital gain. Always it will be short term capital gain. Okay, that's the point to be understood. Less, I mean, you will not be allowed STT, and nothing else is special in this. 54 and 54F. In 54 and 54F, you know, last time what had happened? They said that 54 and 54F limit will be there. Means in 54 and 54F, 54 is when you sell one house and invest in another house. 54F is when you sell any asset other than house and invest in house. So in these cases, limit has been put for exemption. That limit is 10 crore rupees. How much is the limit? Once write in the chat window. That limit is 10 crore rupees. So that was the last time's amendment. Now they have just clarified that, you know, by selling the house or by selling any asset other than house, when you want to invest in house, for time being, you can deposit the money in CGDA, capital gain deposit account. Now in this CGDA also, your deposit cannot exceed rupees 10 crores. Your deposit in CGDA cannot exceed 10 crores. Because anyways, you cannot claim exemption in excess of 10 crores with respect to this 54 and 54F. Clear? All of you must be remembering what is CGDA, capital gain deposit account. All of you remember? What used to happen? If I sell my asset, say my house in this year, and I want to invest in another house, time limit given to invest in another house is 2 years from date of transfers, or 3 years in case of construction of house. So big time limit is given, isn't it? So big time limit is given. So it may happen that I'm not purchasing house up to due date of filing return. Then how will I tell government that I'm going to purchase house? So the way to tell that is to deposit that amount that you're going to invest in house in a CGDA, capital gain deposit account. So in that capital gain deposit account, you can keep maximum 10 crore rupees. That's what the amendment is. Because anyways, your exemption cannot exceed 10 crore. So what you can keep is also up to 10 crores. Clear? So I hope all of you have understood this. And then for cost of improvement, read this highlighted part. Cost of improvement or cost of acquisition of capital asset, being any intangible asset or any other right, shall be nil. Okay, other than for those intangible assets for which cost of acquisition is already given. There is always a problem in calculating cost of acquisition and cost of improvement for intangible assets. So they have clarified that it will be nil. Okay. Then what matters in IFOS? Sum received under life insurance policy will be taxed under the head IFOS. We discussed that at the beginning also. Okay. Then set off and carry forward, facilitating certain strategic disinvestment. Okay. Relief to startups in carry forwarding and set off of losses. Go through this. Relief to startups in carry forwarding and set off of the losses. Okay, the time span has been increased in order to align this period of 7 years with the period of 10 years. The time period for loss of eligible startups to be considered for relaxation has been increased from 7 years to 10 years. Then in deductions, deduction has been given in respect to contribution to Agnipat scheme. Okay, see. Section 80 CCH has been inserted to provide that an assessee being an individual enrolled in Agnipat scheme and subscribing to Agniveer Corpus Fund shall be allowed deduction of the whole of the amount deposited by him and also amount contributed by central government to his account in Agniveer Corpus Fund from his total income. Okay, see this very interesting point. 115 BAC usually doesn't allow any deductions. 115 BAC default regime usually doesn't allow any deduction because it's a lower percentage of tax on a higher income. But 115 BAC has been amended to provide that individual enrolled in Agnipat scheme and subscribing to this Agniveer Corpus funds shall get deduction of government contribution to his Seva Nidhi. Okay. So government contribution element, he will get deduction under the season. Yes, 80 CCH will be applicable to NR also because they are just saying individual, so it can include both. Then 80G, from 80G, there were some specific, you can say some specific funds in which deduction is allowed. Now 3 of the funds are removed. 3 of these funds have been removed. Jawaharlal Nehru Memorial Fund, Indira Gandhi Memorial Trust, and Rajiv Gandhi Foundation. Okay, these have been now removed from that list. So if you give money in this trust, in this fund, in this foundation, then they will not be allowed as deduction under 80G. Agreed? Clear? So these things, that 80G thing can matter in the exam. Amendment to 80LA. Okay, 50% deduction. So what was going to happen in 80LA? For first 5 years, you are going to get deduction of 100%. And for next 5 years, you are going to get deduction of 50%. Now, that for next 5 years, 50% has been increased to 100%. So, extended benefit of 100% under 80LA. Then 92BA. Today in our international tax class, we were doing 92BA, specified domestic transactions. So what is the amendment in 92BA? Transaction between cooperative society and other person with close connection will now come within purview of specified domestic transaction. Meaning to say, if transaction is taking place between cooperative society and the other person with close connection, then you will have to determine arm's length price. But of course, as you know, only if the aggregate of specified, only if the aggregate of a specified domestic transaction exceeds rupees 20 crores. You all remember this point of 20 crores, right? So what you are saying, what was expected? Removal of those three things from ATG. You're talking about that? Yes. Then some procedural amendments in reducing time limit for furnishing transfer pricing report. Okay. So go to the highlighted part. The deduction in respect of interest in case of thin capitalization. This limitation now introduced to that. Now what becomes important is this 115A, which is the rates of tax for non-resident. So when dividend is received from that IFSC, then the rate of tax will be 10%. Okay, royalty income 20%, technical fees 20%. Okay, so of course corresponding amendments are made in the TDS provisions also. And obviously, you know this point, when double taxation avoidance agreements are applicable, then you will apply the rates which exist in Income Tax Act or DTA, whichever is beneficial to the assessee. So that clarification has been given. Agreed? So please mark this section also important from exam perspective. This amendment also important from exam perspective. 115A. Tax rates on dividend, royalty and technical fees in case of non-residents or foreign company. So non-resident or foreign companies are earning this income in India. These incomes are arising in India. On that, the rates of tax have changed. So automatically, rates of TDS have been changed because those NRs and foreign companies don't come in India to pay tax. Their tax is deducted at source while making them payment from India. Okay? Yes, yes, yes. Now it is increased, correct, to 20%. Then special rates of tax. You know, na, section 115, 115B, 115B is all about rates of tax. And you also know that there is 115BB, which is tax on lotteries, gamblings, correct? Yes, absolutely, Komla. So now they have introduced 115BBJ. They have introduced 115BBJ, which is tax on winning from online games. You must have understood in GST also, there was so much about online gaming, isn't it? There was so much about online gaming. Here also, they are talking about tax on winning from online games. The tax rate will be 30% plus surcharge plus health and education cess. No expenditure allowance will be allowed from such incomes means taxed at flat 30%. It is similar to your what? It is similar to your winning from horse races and card games. Casual incomes. Deduction under Chapter 6 is not allowed. And even benefit of unexhausted exemption limit not allowed. That's what we are saying. Taxable at flat 30%. Isn't it? Then this is just a clarification given that to pay the alternate minimum tax or whenever there is a AMT credit, that AMT credit will not be used to pay your normal income tax. You know, na? AMT credit cannot be used to pay normal income tax. Let it be under 115 BAC. That doesn't matter. Then, in search and seizure topics, by the way, there is one topic, income tax authorities. In that topic, one officer, Joint Commissioner Appeals, has been added. Then, in search and seizure topic, assistance to authorized officer. Authorized officer who can search the premises, no? Authorized officer who can search the premises under section 132, he has been now given assistance of some special officers. So see, to provide that during course of search, the authorized officer may requisition means ask the services of any person or entity as approved by principal commissioner or chief commissioner, the principal director general or director general in accordance with procedure prescribed by the board. Board means CBDT. Similarly, in during and post search inquiries, the authorized officer may make reference to any person or entity or valuer. So they can ask valuer to assist them, who shall estimate the FMV. Because see, this officer wouldn't be having 100% knowledge. No? That's why this type of provisions are put up. Clear? Currently, online gaming platform is emerging, but it seems based on these tax provisions, government will kill this platform. Maybe, and maybe it is good also to kill this. As Google is keeping a major portion of gaming receipt than our Indian government. Means I did not get you. So might be that might happen, and maybe indirectly government see. So government in short is not directly putting the regulation on online gaming. They're not directly restricting, but they are saying taxing it. So it is like not directly banning the cigarettes, but putting dangerous photos on the box of the cigarette. Got it? Got it? Got my point, no? So anyways, they know it is not good. But anyways, if they ban it, still people are going to do it. Then better legalize it, but tax it. Win-win situation. Okay, that is the point. Then just clarification is given regarding advance tax while filing updated return. You know you can file ITRU. So in that case, how to calculate your interest for delay in payment of advance tax? That is being discussed. So just they say that interest on of 234B shall be computed on amount equal to assessed tax as reduced by amount of advance tax, the credit for which has been claimed in the earlier return, means original return, if any. Okay. Then what else matters to you? Fine. So based rest are the timeline provisions. this TDS wala provision on accumulated balance due to an employee. 192A means what? Accumulated balance of PF due to employee. What used to happen, you know? If employee did not give PAN, then the TDS used to be at the rate given in this section, or means 10% is the rate given in this section, or maximum marginal rate of tax, whichever is higher. So they used to suffer a lot. Getting it, so amendment is done that higher rate here will be 20%. Higher rate here will be 20%. Not maximum marginal rate of tax. Maximum marginal rate of tax can go beyond 30%. So to save these assessees who don't have PAN, the maximum is 20%. Okay. Then earlier there was no TDS on interest on listed debentures. Now that exemption is removed. So now there will be TDS on listed debentures also, and that will be at the rate of 10% under section 193. Then friends, new TDS sections have been inserted for online games. Can you believe? For online games, new TDS section has been inserted, that is section 194BA. Getting it? Section 194BA. Check. Has been inserted. So amendment in both 194B and 194BA, because one more small amendment has been done, that earlier what was the case, if single winning was exceeding 10,000, then only TDS used to apply. But now it is, they have done it aggregate, because people used to take advantage of this. So they have done it aggregate of winnings in a financial year. If total of winnings in a financial year exceed 10,000, then there will be TDS now. Because big winning, people used to break in small winnings and give to avoid TDS. Okay, so to stop that, what has happened? Have I highlighted that point? See this. I have highlighted that point. 194BB has been amended to provide deduction of tax under these sections shall be on the amount of aggregate of the amounts exceeding 10,000. Okay, so might become important. 194B has been amended to include gaming or betting of any form or nature, but 194B has been amended to exclude online gaming, because for online gaming now you have got 194BA. So exclude online gaming for 194B and made a new section for online gaming, that is 194B. Clear? 194BA to provide deduction of tax at source on net winnings in the user account at the end of financial year. Okay. Clear? Then 194LC. In 194LC, the rate of TDS done is 9%. Then threshold limit has been increased for in 194N. What is 194N? Withdrawal of cash. Cash withdrawal from banks. Threshold limit has been increased if cooperative society is withdrawing the cash. Okay. So see, 194N has been amended by inserting new proviso to provide that the recipient is a cooperative society. Provisions of this section shall have effect as if for 1 crore, 3 crore has been substituted. Okay. Means see, when, see, the requirement to deduct tax applies only when, yes, the in short threshold limit from 1 CR will be increased directly to 3 CR when who is withdrawing? Cooperative society is withdrawing the cash. Agreed? That is the increase. 194R, you know, is for TDS on perquisites. In case of businessman getting anything in kind, it is TDS on that. So new explanation 2 has been inserted to 194R to clarify that provision shall apply to any benefit or perquisite. See whether spelling is wrong here. Whether in cash or in kind or partly in cash or partly in kind. Then of course tax petty relief, you know, at time of TDS. Tax petty relief at time of TDS means the TDS will be at the rate as given in the provisions of Income Tax Act, or C, where in case of pay to whom agreement of 1990A, that is DTAA, applies, and such pay has furnished tax residency certificate, tax would be deducted at 20% or at the rate provided in 1990A, whichever is lower. Okay. Then to some sections, the lower rate of TDS benefits have been extended. In 197, you can make an application and say that we want to deduct tax at source or we want to get TDS done at a lower rate. So that has been discussed in, that 197. Provisions have been extended to those sections. Then one thing that can get important is your threshold, some increase in scope or rate of TCS in certain case. See this, increasing rate of TCS of certain remittances. So where it has been changed, in the case remittances means we are talking about foreign remittances. Okay, in that case, where is the change? See, overseas tour package is sold. For this, you are making a foreign remittance. The TCS should be, earlier it was 5% without any threshold. Now, if the payment is up to 7 lakh, it is 5%. If the payment is above 7 lakh, the TCS will be at 20%. Okay, and any other case, remittances for any other case, directly the TCS will be at 20% of the amount or the aggregate of the amounts in excess of 7 lakhs. So got it? Did you all follow? As I already told you, introduction of authority of Joint Commission of Appeals. Under appeals, one new officer has been added in the mechanism. Is it clear to all of you, the provisions? So I hope you have followed it and you have understood its importance from exam perspective. Okay. And 115% concessional tax rate, 115 BAE section for cooperative societies engaged in manufacturing. For cooperative societies engaged in manufacturing, there will be this concessional rate of 15%. Okay, so as provisions are applicable to companies, manufacturing companies, similar provisions they want to make applicable to cooperative societies engaged in manufacturing. That is the intention of this provision. So I hope guys that you have followed the amendments, and thank you so much for being wonderful audience. About last 2 hours we were doing these amendments. So I'll see you now in the main class and MTP sessions, okay, and the marathon and everything as we do. Okay, and we also have a fast track batch coming up for CMA final. So I've already made a video on that, the fast track batch of both DT as well as IDT. Okay, so if you're interested, then go ahead and do that. Okay, those who are doing main batch, follow that. Okay, try to do this subject in a very concise and good manner, and God bless you all. Thank you so much. If you are new to the channel, subscribe to the channel and do hit the bell icon. And if you have followed the video, do consider liking the video and putting your valuable comment. Thank you so much. See you. Bye bye. Take care.